The Dinar Daily. A new era is dawning in the world of Iraqi finance, and it demands your attention. Stop scrolling for just a moment, because what we're about to unpack will fundamentally reshape your understanding of the Iraqi dinar's global potential. For years, the conversation has been dominated by whispers, rumors of secret lists, sudden revaluations, and clandestine banking agreements. Today, we're doing more than just cutting through the noise. We're providing a verified roadmap to the real progress unfolding within Iraq's financial infrastructure. This isn't a speculative hype piece. This is a deep, factual examination of the systemic, technical changes being mandated and implemented by the Central Bank of Iraq (CBI) and key financial institutions. Changes that are non-negotiable prerequisites for true international currency integration. This foundational overhaul is the only story that matters, and it's happening not in hushed online forums, but in policy documents and digital system upgrades that are visible to anyone who knows where to look. The biggest question echoing across the globe is simple. Are the world's banks truly preparing for Iraqi dinar exchanges? The answer is a resounding yes. But not in the way the rumor mill suggests. The preparation isn't about setting a secret higher rate. It's about a rigorous years-long process of modernizing the entire banking ecosystem to meet uncompromising global standards. This journey toward readiness has seen major institutions, both state-owned and private, work tirelessly to align their operational frameworks with international finance. Throughout 2024, and continuing into 2025, the focus has been on adopting cutting-edge digital financial networks. This includes the implementation of robust real-time gross settlement (RTGS) systems, which allow banks to process HIVE-AL-U payments instantly and irrevocably, a critical element of interbank trust and stability. Think of this extensive modernization as a series of mandatory global inspections. Before a nation's currency can be freely traded on the world's financial highway, its banking system must pass a comprehensive operational and regulatory review. Iraq's banks are now systematically passing these inspections, proving their capacity for transparency, traceability, and security. The core of this reform lies in adopting technology and stringent protocols that make every transaction traceable, auditable, and compliant with the demands of the global market. This essential work is the backbone of any future currency convertibility, demonstrating a serious long-term commitment by the Iraqi government to transform its economy from a cash-based system into a modern, integrated financial powerhouse. One of the most powerful signals of this intent is the Central Bank of Iraq's intense focus on anti-money laundering (AML) and countering the financing of terrorism (CFT) updates. International compliance is not a footnote. It is the entire foundation upon which global financial relationships are built. Institutions like the Financial Action Task Force (FATF) monitor countries' adherence to these guidelines, and Iraq's commitment to tightening regulation, improving transparency, and implementing the necessary legal and technical frameworks is the single biggest step toward regaining international trust. Without this trust, no major global bank from New York to London will enter into the necessary correspondent banking relationships that underpin foreign exchange. The common misconception is that a secret document will suddenly reveal a list of international banks that will perform over-the-counter exchanges. The reality is far more procedural and less dramatic. International giants like Chase, Wells Fargo, or HSBC do not take on the risk of trading a currency until it achieves consistent liquidity standards and full regulatory approval. Their involvement comes not through a secret memo, but through the establishment of correspondent banking relationships with compliant Iraqi banks. This allows the local Iraqi institutions, having met global standards, to process foreign currency transactions through the massive, established networks of the international firms. The entire foundation for these crucial partnerships is being meticulously laid right now through quiet, technical upgrades. A key pillar of this overhaul is the aggressive expansion of digital payment gateways within Iraq itself. Before the dinar can be respected internationally, it must function with unquestionable efficiency domestically. The modernization drive sees local banks, government institutions, and merchants adopting interconnected electronic platforms that allow for instant settlements and meticulous record-keeping. This shift away from a cash-dependent society is critical. A cleaner, faster, and more transparent local payment system is not just about convenience. It is a direct and necessary prerequisite to being able to effectively plug into the global financial system, providing the clear data visibility that international partners demand. Consider the essential role of real-time gross settlement (RTGS) systems. These are not merely optional software upgrades. They are the high-speed rail lines of a modern financial system. The CBI has pushed for the full adoption of RTGS by commercial banks, which ensures that high-value transactions are settled immediately and individually, eliminating the systemic risk associated with batch settlements. For a foreign bank, evaluating the safety of holding and exchanging the dinar, the certainty provided by RTGS that a payment is final and irreversible the moment it occurs is a crucial technical reassurance that the Iraqi system is sound, secure, and compatible with established global norms. The progress of Iraq's two largest state-owned banks, Rafadain and Rashid, is central to this narrative. While these institutions were once burdened by the legacy of a centralized, non-commercial past, they are now undergoing massive restructuring and modernization programs. These initiatives, often supported by international partners, are aimed at overhauling their governance, strengthening internal controls, and expanding their digital service offerings. When a country's largest financial entities adopt online payment portals and integrate with international remittance systems, it signals a top-down commitment to building a credible, globally linked currency ecosystem that supports broader commercial activity. This modernization is also fundamentally about trust. For years, international markets have viewed the Iraqi financial system with understandable caution due to concerns about corruption and lack of transparency. The recent push for alignment with FATF guidelines and the acknowledgement of Iraq's progress by international financial bodies represent the slow, difficult process of rebuilding that trust. Trust is the non-negotiable currency of global foreign exchange. By submitting to external auditing and adhering to globally recognized benchmarks for financial integrity, Iraq is earning the confidence required for its currency to operate more freely on the global stage. What does this mean for the everyday dinar holder or curious observer? It means that the real story is public policy, not private whispers. The banks that will eventually handle significant dinar exchanges are the ones currently making massive, documented investments in their compliance and technology infrastructure. This foundational work, the systemic alignment with SWIFT, the expansion of digital channels, and the commitment to AML/CFT standards, is the true, verifiable indicator of readiness. Any speculation about a secret list ignores the visible, ongoing, and technical work that is the only path to a stable, tradable currency. The concept of liquidity is key to understanding the next step. International banks need assurance that if they buy the dinar, they can easily sell it again in the global marketplace without significant price disruption. This is organic demand, and Iraq is building it through strengthened regional trade ties and economic diversification. Every new trade agreement, every increase in non-oil exports, and every move to facilitate cross-border transactions through official banking channels creates a genuine, non-speculative demand for the dinar. This fundamental economic momentum is what builds the necessary liquidity for a currency to achieve a greater international presence. Another powerful, yet often overlooked, sign of progress is the government's continued effort to reduce its dependence on cash and encourage electronic transactions. This is a two-pronged strategy. It helps fight petty corruption by creating an audit trail for every transaction, and it forces banks to upgrade their core systems to handle digital volume and security. When local financial stability and transparency improve, the international assessment of the dinar's underlying strength also improves. A currency must first be efficient and trusted at home before it can be truly respected and accepted abroad. The journey toward greater currency convertibility is notoriously slow and tightly regulated. It requires consensus among central banks, ministries of finance, and established international partners. This is why patience is the most valuable asset for any observer of the dinar. Currency transitions are not viral news stories. They are measured, legally verified processes. The expectation of an overnight revaluation or a sudden, dramatic announcement is inconsistent with how real world governments and global financial institutions manage such profound economic shifts. The truth in this realm is always communicated through official, public, governmental releases and global financial reporting platforms. The partnership with international consulting firms and development institutions further validates the seriousness of Iraq's intent. Working closely with entities like the International Monetary Fund (IMF) and the World Bank, Iraq is implementing structural reforms designed to overhaul public bank governance and de-risk the private sector. These are not superficial changes. They are deep, institutional reforms aimed at creating a resilient, inclusive, and globally integrated economy. This collaborative effort demonstrates a commitment to technical excellence and adherence to the best practices of global finance. One of the most exciting aspects of this transformation is how financial technology fintech is being leveraged. As digital verification tools and blockchain solutions become mainstream, the traditional barriers to cross-border exchange for lesser traded currencies are shrinking. Iraq's deliberate decision to integrate its systems with these modern, transparent digital rails is a forward-looking step that prepares the dinar for a future where conversions could happen instantly, securely, and transparently. The infrastructure is being built to leapfrog decades of traditional banking inefficiency. The focus on unifying standards across the domestic banking sector is another key policy decision. The Central Bank of Iraq aims to ensure that no matter which licensed bank handles a foreign exchange transaction, it operates under the same strict, traceable, and internationally compliant procedures. This standardization eliminates pockets of risk, creating a more uniform and predictable landscape for international partners. This is a deliberate move to transform Iraq into a stable and credible participant in the regional and global trade market, making the entire system reliable, not just a few select institutions. For those who have held the dinar for many years, the emotional aspect of this journey is undeniable. Your patience is recognized, but it must be paired with a commitment to grounded facts. Every technical upgrade, every policy alignment, and every financial reform brings the country closer to a stronger economic footing. The smart approach is not to chase hidden secrets, but to learn how to interpret the public progress, the official releases, the regulatory updates, and the visible digital connections, as these are the only true indicators of forward movement. The concept of redenomination or rate adjustments is often at the center of speculation. The historical and legal reality is that any such move is an organized, public, and legally verified process that would follow, not precede, full economic stabilization and explicit approval by global financial partners. Governments do not enact profound currency changes via overnight surprise. Therefore, the commitment to full compliance with global monitoring bodies is a mandatory long-term exercise that must reach a clear conclusion before any final steps toward greater convertibility are taken. We see clear evidence of this preparation in the progress of the RTGS system, which the CBI initiated to connect its operations with the Ministry of Finance and major commercial bank branches. While the system's foundational work began some time ago, its continued mandatory expansion to all licensed banks and its role as the backbone for high-value payment settlement is a crucial ongoing development. It guarantees that the core of Iraq's financial machinery is operating with finality and reduced risk, a prerequisite for any global financial confidence. To verify updates yourself, your strategy must be to rely exclusively on official banking channels. Go directly to the Central Bank of Iraq's website for formal announcements. Check the publicly accessible sites of major Iraqi commercial banks for their foreign exchange services. If you are an investor outside Iraq, the most direct path to reality is to call your own bank's international wire transfer or foreign currency department, not a local teller. Ask them if they currently buy or sell the Iraqi dinar. Their answer will be a clear, non-speculative reflection of the currency's current international trading status. The final value of the dinar, like any currency, will ultimately reflect the nation's productivity, trade balance, and stability. Iraq's effort to diversify its economy beyond oil, by expanding exports, investing in infrastructure projects like the Development Road, and fostering the private sector, is the organic process that strengthens the fundamentals behind the currency. When you see genuine economic growth happening alongside these verifiable banking reforms, you are seeing the sign of true, sustainable progress. Currencies do not rise on rumor, they rise on real economic growth. In conclusion, the situation in 2025 is one of tangible, documented preparation. The banks are modernizing, the digital systems are being tested and implemented, and the government is tightening its regulatory oversight in alignment with global mandates. This is not the finish line, but it is the strongest, most transparent position Iraq has been in for years. Every technical upgrade, every policy shift, and every step toward AML/CFT compliance points in one clear direction: a currency preparing for a significantly increased role on the global stage. The foundation for this new financial future is being meticulously laid right now in plain sight. No one can provide an exact date or a final rate, but the visible progress is undeniable. Your most effective strategy is to stay informed, not influenced. Keep your focus on factual, public documentation from official channels. The moment a fundamental shift occurs, you will not need an anonymous source or a secret list. It will be announced by central banks, confirmed by global news agencies, and reflected in verifiable market data worldwide. The dinar's path toward wider exchangeability is a real step-by-step process built on policy, integrity, and digital advancement. This is the reality you must anchor your understanding to. By focusing on facts and verified developments, you will always know precisely where things truly stand. Stay informed, stay steady, and continue to prioritize knowledge over shortcuts. This transformation is moving forward, and being prepared with accurate information is the best way to move with it.